Morning, Steve Free in Chicago with the morning grain comments. Well, we have three issues that we have to try to digest to come up with price discovery in the grains. First of all, over the weekend, the Chinese announced that they would start granting on March 2nd tariff exemptions for 696 U.S. goods that could be imported into China. Now, the number one question is, what are they going to approve? What are they going to buy? How much are they going to buy? And then the Ag Minister of China also stated that the spread of this virus is hurting their domestic poultry industry. It's shutting down live markets because there's no supply. They're shutting down slaughter and processing plants, and there's limited transportation of feedstuffs. So again, does China come in and buy what probably is on the list that includes the pork, the beef, the poultry, and dairy products, or do they come in and buy the soybeans and the corn and the DDGs and the ethanol and dairy products and things of that nature? So it's going to be important that we find out exactly what and when they're going to buy. Now, the trade is estimating that U.S. March 1 corn stocks will be around 7.8 billion, and the March-August demand is estimated around 5.9 billion. So there's plenty of corn out there to satisfy the current estimate of demand. The key is, will there be any new China buying, and what price do we need to go to make sure the pipeline is full? On the soybean side, soybean stocks are estimated around 2.2 billion, and the March-August demand is 1.7, a little over 1.7 billion. So again, do we need to go to 940 on May beans and $4 May corn to buy this current demand forecast or any new China buying? We did see that wheat prices are up sharply, 11 cents. I think most people are saying it because of the devastation weather in Australia is causing them to lower their estimate of their wheat crop, which would lower their amount of wheat that they can export. Down in South America, the weather is good. We saw private people start increasing their estimates of the Brazil crops of 1 million tons to 125 million tons in the beans. 27% of harvested versus 36 last year, and they upped the corn crop to 100 million tons. In Argentina, they increased the bean crop 1 million tons to 54, and the corn 1.5 million tons to 49 million tons. So there is that supply down there that could be competitive. We also have to kind of watch and see what the Ag Forum says on Friday with USDA. They were supposed to plug in some numbers as far as expectations on U.S. exports and carryout based on the China Phase 1 deal. But at the same time, we're expecting, especially in corn and beans, higher acres to be planted by U.S. farmers in 2020, which could offset the increase in demand. Managed funds last week, they increased their shorts in corn, beans, and meal, reduced their longs in wheat and soybean oil. We estimate right now they are long 40 wheat, short 80 corn, short 80 beans, short almost 70 meal, and long 48 oil. So do they come back in and buy because of the China buying, or do they hold on to these positions and wait for the China buying? We also note that the virus continues to spread, 73,000 cases, almost 1,900 deaths, and so we've got the U.S. stocks starting out lower, crude is lower, and the dollar is higher. As always, these are my thoughts, not those of ADM or ADM Investor Services. Have a safe and profitable trading day.